Oh man, Bitcoin is booming. We've just broken the $50,000 mark, the much fought over territory, and now there's a good clear way up for us, guys. Let's take a look at the crypto market. We can see, let's take a look here first. You can see Bitcoin sitting at 50,272. We were a bit eager last week that we were going to break this last week, but it took the weekend. We had to be nice and patient, but we're through. Took a couple of attempts to break through that 50,000 resistance, which can happen because what happens is the sellers pile up a sell wall, what's called a sell wall at the top. So anytime it gets to 50, they want to sell. People want to take profits. You've got short sellers at different resistance levels, and it can just take a few momentum energy rallies to break through that mark, but we had a nice healthy clean break. We want to see us build upon this now. Let's look at the other big movers. You can see all of the coins have moved in solidarity. Just look where we have come from 60 days, guys. Look at the 30-day and 60-day marks. In 60 days, you've made 50% on your Bitcoin. And by the way, year to date, if you bought Bitcoin in January, you're still 74% up despite all that FUD and, oh, it's a Bitcoin crash. Sometimes you just need to switch off, believe in your fundamentals, and just sit back and let the cryptocurrencies do their work. Now you can see Ethereum up 70% over the last 60 days, 100% on your Cardano. Cardano's been an absolute tear. Cardano's doing really well for me and it's printing a lot of tendies. 280. My cost basis is less than $1 on Cardano. So nice early entry at the beginning of the year. So Cardano is doing really well for us. You got Binance Coin always moving strongly. I remember people didn't want to buy this at, when was it, $250, $300? But they'll FOMO after it when it's chasing $550, $600. And that's the key message here, guys. Don't buy Bitcoin now, right? Don't buy Bitcoin now. That's the key message here, because a lot of people were not willing to buy it at 28, but now suddenly everyone's FOMOing. What sense does that make? It will dip again at some point, and if you have conviction in Bitcoin, buy it then. To be chasing it now on these ridiculous pumps where I've just shown you we're 50% up on 60 days, then you wonder why you get burnt when there's a correction, right? We've got to have a detached a feeling away from our purchases and just seeing the market rise. If it's green, you shouldn't really be buying. You should be buying in reds. That's the key, right? And that's what institutional investors are doing. That's what smart investors are doing. What the best retail investors are doing is waiting for those red days, buying with conviction, because what fundamentals have changed really from Bitcoin in the red to the green? And always, things are improving and moving in a positive trajectory, but what's really changed? If your conviction in Bitcoin being an alternative and a hedge against inflation and fiat currencies and understanding that this is the technological trend, how much of that has changed in 60 days? Well, to justify a 50% increase? Nothing, right? It's just the games of the market and the momentum and people FOMOing in and then panicking, FOMOing in and panicking. So if you're buying now at 50 all the way up to 60, I know it gives you comfort to buy it because it's greening and it's moving up, right? But that's what new investors will be doing, and they're the ones who are going to get hurt by this, and then they'll fall out of love with cryptocurrencies and say, oh, it doesn't work, it's a scam. But it's not. It's just like any other asset class. If it's pumped up 50%, Ethereum 70%, Cardano 100%, don't buy now, because now's when it's hitting the front of CNBC and any other newspaper, and everyone on Twitter is talking about Cardano pumping. Where were you researching it beforehand, 6 months ago? That's the key. So yeah, just don't buy now. But let's take a look at the Bitcoin chart. So we can see here, we spoke about this green level for a long time. I had it at 50,308, and we've got a nice break. This is the daily chart. You can see a clear trend reversal now. Really nice. Look at those bottoms here we had. It was scary times at those 28. But if you had conviction, you stayed in and you didn't sell a single piece or slither of your cryptocurrencies, and Bitcoin particularly. So this has bounced back really nicely now. We've got a breakthrough. We'd want to see it push on now on another day candle above the 50. We don't want to just tank straight back down and have a fake out. Really important that we start building some scaffolding above this. But the interesting thing now, and the reason I want to look at this daily chart, is after this major 50,000 resistance, which is a massive psychological resistance, and we've not been past this since May. As you can see here, since May, we've not been above 50,000. The other levels aren't too powerful. So you've got a resistance level here, 53,000 you can call, and it looks like you've got one in this sort of range. Resistance level at 57 there. If you date back to around this peak here on the 23rd of Feb, which is this one. Okay, so you can see those are your resistances before we get to the 59,500 mark. And it's that green line there which we need to head to next. Okay, so we want to take this step by step. We probably have a little bit of it. We got to clear this 50 first. We've got to be able to get through these 53 resistance levels, which shouldn't be too strong, and a 57 one, which looks a bit stronger. Let's think of it like the bosses in a game. And then we can get up to the 59,000 mark. Okay, once we've done that, there's no reason why we can't reach an all-time high. But to be talking about that just now is a little bit premature. Let's stabilize our 50,000 position. Let's push towards 53 and then the 57 mark. And then we can start talking about that 60,000 mark. Okay, but don't just listen to these FOMO articles. Oh, we're heading to, all-time highs right now. And then you FOMO in and start buying a load of Bitcoin because you think we're going to head to 64,000 in the next week. Probably unrealistic, but it can happen in crypto, which is why these people get away with saying that. Okay. Let's have a look at the 4-hourly charts. You can see here, this was the uptrend out of the reversal pattern, out of the downward trend. This was our breakout, and then our breakout within the mini one as well on the 4-hour. So that's come out nicely. We can see here, this powerful wick has only just taken us here. It's a bit worrying until we get a clear 4-hourly close above this. You want to see the whole body of that candle above this. Before we feel confident that we've cleared this 50,000 mark. So a lot of articles, a lot of people are saying, we've clearly broke this yet. Technically, from a technical point of view, we're not clearly broken through yet. We want to see the 4-hourly close above this one here. We're looking strong on the EMA ribbon, so it's spreading out nicely, which means we're getting momentum to the upside. A clear reversal out of this pattern, as you can see from this downward trend. Clear reversal out. And now we can head higher. But let's spend some time looking at some of these fundamentals. So we saw on Friday that JP Morgan and Wells Fargo joined Goldman Sachs and BNY Mellon in introducing crypto-related funds for the investors. We knew that was the case. We've spoken about this a lot. Even the banks who aren't talking about it, you better believe they're creating funds, they're hiring teams to get trading into crypto. It's just how it is. But let's look at a few more other pieces. So we saw that Coinbase are agreeing to buy 500 million in crypto and investing future profits into crypto portfolio. Not surprising, but it's a good mover for the market. Obviously, Coinbase are so heavily involved in the crypto market that they have insider information, so to speak. They get a kind of payment for order flow, visibility of where the market is moving, which coins are people buying in, what are they believing in, and so naturally they can put their any of their profits into a crypto portfolio. It makes sense for them to do so. We've also had PayPal. Interestingly, PayPal have now introduced their crypto trading crypto trading service to the UK. So before this, it was just in the US, and now, which was, I think, happened a year ago, and now they've allowed that to happen in the UK as well. Now, for anybody in the UK and in America who's using PayPal, just remember you don't actually own the keys, and therefore you don't actually own the coins. This is no different to using Robinhood to buy your Bitcoin. But nonetheless, this is a good mover for the market because it's going to get a lot of people who are new to Bitcoin, who have not dabbled in it just yet. It's going to give them a chance to get in at a low level. You know it's safe. You know it's with a company you've used before, and it can just get them used to Bitcoin and the moving and the volatility. And I think overall it's good. I don't expect, massive people who are using serious exchanges to suddenly start using PayPal, but it's getting the other end of the market where people want to dabble around into a cryptocurrency market. And the great thing is maybe those people will graduate to a proper exchange, a proper platform, own their own keys and assets. So, a lot of these Bitcoin maximalists who go around saying, oh, this is no good for Bitcoin because you don't own your keys and it just tracks the underlying asset. I get it. Not your keys, not your Bitcoin. I completely get that. But this is a good way for people who just want to start trading. It increases the awareness for the community, which can only be a good thing for Bitcoin. Now, moving on to the Bitcoin's Ijaz ETF, we had news last week that Gary Gensler could be favorable for a type of ETF around Bitcoin. But the difference here is it would not be an ETF as we know it. So what this would be an ETF based on Bitcoin futures. So Bitcoin futures, which is a regulated asset, is just a contract, and you can have an ETF which tracks the price of that contract. Now, when those contracts expire, the ETF owner will need to renew those contracts. Okay, so again, not tracking the exact underlying price of Bitcoin, it's tracking the futures, but it's a clever way around to have an ETF which is based on a regulated asset, which is the Bitcoin futures, because at the moment Bitcoin isn't allowed to have an ETF directly in the United States. So I think there's at least 4 or 5 big funds now who have applied for a Bitcoin futures ETF, which is really interesting because, again, no different to the PayPal message I just shared there in terms of educating and building awareness from retail investors interested in crypto, this is going to allow a lot of companies who cannot, for board reasons and from bureaucracy reasons within their governance reasons within their company, who cannot buy Bitcoin, they can get exposure through these ETFs. Okay, so it's still giving them exposure to the market, it's giving them an interest and skin in the game in the market, which can only be good for Bitcoin. So finally on this update, another piece of bullish advice, bullish indicators is we're heading towards a golden cross. Now, again, we know this is a lagging indicator, and it looks like over the next kind of 10 to 15 days, we could be in this territory where we see the 50-day moving average cross the longer term 200-day moving average. And generally, about 50% of the time, this can lead to a good rally in Bitcoin. Now, I don't hold too much weight into this. It's a lagging indicator, but nonetheless, it's good that all these stars, so to speak, are aligning in the right direction. But again, all these things, whether it's news articles, whether it's technical analysis, it should not take away from your fundamental belief in the fundamentals, in the on-chain metrics of Bitcoin, in your belief that Bitcoin is going to provide a hedge against inflation or fiat currencies. And that's the key here. And we can see that evidenced by the fact that we've just moved off the bottom from 28K back to a 50K level when people thought Bitcoin was done. You know, the naysayers were pushing it down and saying, well, you know, you're out of it. This is going down to 15. It's going down to 10. And people panic sold. Those that didn't know any better did panic sell. But it's a time for them to take that as a message, to really educate themselves on their investments, to understand what Bitcoin is, why it truly can be revolutionary and is revolutionary. So that way they can hold their conviction in those tough times, because we're going to get another correction. And that's why I really do implore you not to chase this right now. If you've not got in yet, be patient, wait for it to drop down or correct a bit, because it will correct again. And that's just the cycles we see. We see that every time with Bitcoin. Anybody who's been here for a few years will know that. Okay, so there you go, guys. A Bitcoin update. A great day because we've crossed the $50,000 mark. Whether it's a little bit of a fake out and we're going to bounce back again, it should be a matter of time before we build on that. I keep going higher. All right, guys, we'll see you in the next one.